All right, ladies and gentlemen, I got your watch list coming in November 6, 2019, and the stock market is going crazy, but I didn't put it in the title because one of the keys I want to talk about is now the best time to buy into the stock market or start investing. We hit more all-time highs. We opened up and sold off, but we actually are still holding up at a very, very high level. There is not as much volume, but considering the price level of the indexes, we are up a very good amount, and the volume is actually pretty decent dollar volume-wise. But one of the biggest things we're seeing across the board, I'll show you guys with some of the companies we're watching, and this is something to keep track of here, is where stocks are positioned. I even heard Jim Cramer talking about it even today, saying you want to be early in the breakout. People are saying this is a technical breakout, and it's good to see the market at least holding some of these levels. So the question is now the best time to buy, and I want to talk about that mixed in with discussing our plays and what we're going to be looking for tomorrow. And tomorrow is going to be a big earnings day, my friends. Our Qualcomms and Rokus and Squares and all that is going to come to life tomorrow after hours. So make sure you guys are there and you can watch it all live. I'm probably going to add a little bit more of Qualcomm tomorrow morning, as well as some other ones, and even how we see some of these continuations. So make sure you're there. We are live Monday through Friday, 30 minutes before open. It is the first link in the description, and it is pinned in the comments, but be there. Click anytime during market hours. You can watch us trade live. It is free $99 to be there. All we ask is that you're positive, respectful, maybe drop a thumbs up, but just show love. And let me ask you too, what are you grateful for today? Think about that for a second. Pause. Okay, let's get back to it. But I'm excited. It's going to be a fun week regardless of what happens. So hopefully you guys are prepared, and you guys got to see TLT and how that's playing out. So let's get into all of this. We will not delay anymore. Make sure you drop your thumbs up. Make sure you guys are subscribed so you don't miss these watch lists. And if you do miss anything from the stream, we're going to cover it right here. And the most important thing you need to do, post your watch list below. Let us know what you're playing. What do you got? Go post your earnings play. Say whatever you guys are in. Say what prices you got them at. Maybe we could go through these even middle of the day and go through the comments and see how some of the earnings prices there. But post it, man. Use the comment sections. Let's get that information source, baby. So I'm excited if you guys couldn't tell. But right off the bat, get ready for negative trade news. Whoa, switch gears. So essentially the market's being high, but kind of how I'm seeing China go back and forth this. Get ready for some sort of negative trade news. I want to be ready, but here's also my key with it. Because of all of these technical divergences and breaking out and how you're seeing people flock to stuff, what you're seeing happening with bonds, don't try to time it. Some people are even getting discouraged from going after puts, and that's usually what happens. The market could stay crazier longer than you could stay solvent. React, and it will be cheaper. So I'll remind myself about Google. I'm going to show you that play, and that's a good example even watching these weeklies. But be on the lookout for it. That's kind of what I've been watching even here at close. It was just weird, some of these movements. We're seeing a lot of trade news come in, and the market's reacting less and less and less. So what I'm saying by prepare for is just wait for some level of bombshell. If you guys are on the stream, you got your stream alerts, your stream insurance, you'll be good to go. But we'll see it happen, and there will be an opportunity for us to react on it. So that is really the key with it. But watch for more of these political discussions to kind of start coming back into light in the next few weeks, especially as we wrap up earnings season. And then again, coming into December. But remember, November, December are historically very, very strong for the markets. So there's that. Next is earnings season, baby. There's a lot of non-name brand stocks. So these are what I've said even be hunting for and looking for is these not name brands, these companies that aren't Facebook, Amazon, Google, and all that. They're providing big moves. We even saw some today. We played a HubSpot that ended up moving, but not to the 3 standard deviations we were pricing in. But tomorrow especially, there's going to be a lot of big companies, and then what happens on Thursday. So space out your budgets and go there, and at the very least, let the price reflect it. I made a few plays today, and we'll go over them, but the key to what I was doing, it could really be reflected in the sense that there's so many opportunities. We could get a general idea of what direction, but you're going to have to control it with the budget to play a lot. You guys saw what $30 could do with something like ANET, but imagine you could play 10 of those $30 plays. That's $300. So keep that in mind if you're really trying to space out and stretch that dollar. But then again, on the other hand, we have some of the bigger plays like Qualcomm and TLT and even Square, which is pretty decent. So there's the balance we got to find with it, my friends. Find your peace, find your zen, yes. But watch out for all that. And then the technical breakouts and divergences. And what I will call this, because I agree with it, but I wouldn't necessarily, you could say it's technicals, this and that, but what we're seeing all across the board with a lot of different companies right now, it is the price action. And the way I view it is what people are willing to pay for the same asset, but X amount of time has gone by. high. That's the way I'm viewing a lot of this stuff. So it's kind of what we've talked about even with the long-term portfolio and stuff. It's saying, what is the price of something? What's something breaking out? Maybe I'll use Square as an example. And even then, you could even see some of this stuff on Google. But take a look, here's Square. It's at a crucial level of support. You could say it's going to technically break out or up, but I'm viewing it in the sense, what are people willing to pay for the same stock, maybe better or worse growth? They were willing to pay the same price 1 year ago. Even if you want to go 3, 4, 5 years ago, you could see kind of how the market's valuing stuff. Same thing even with companies like Google. And this one I'm going to have to come back to show you guys, but you could kind of see, in the last 3 years, is this going to be a technical breakout? Could this bring stuff up? Yes. But am I assuming it on technicals? I'm more so assuming it as earnings have came out. We're seeing where the market is at. And even though there is a lot of risk, there's the trade war. Essentially, people are willing to pay the same price they were paying for Google in July of 2018, but now Google's made more money. The growth outlook has changed a little bit, but they've made more money and they've done better than at this point. So a year's gone by. So really think about that when you're seeing some of these companies go up, and if you want to challenge these companies go up. Essentially a lot of these companies, maybe in July 2018, it wasn't justified being this high, but now a year and a half later, it might be very well justified given their past earnings and everything else. So that's what I'm watching for, but that is going to be important because we're seeing this within a lot of companies. So watch out for that. As far as today, we played HubSpot. That was one of the smaller earnings plays that we made, and it ended up dropping 8%, but I think I got like a 105 or 115 put. Those might come up because they're November 15th, but if anything, it's not going to do something crazy. We'll see how that plays, but they even beat on earnings and it went down. But this one, the earnings wasn't pricing in too much. This one didn't really meet our criteria. So that was just its own obscure thing. So watch out for that. We played that. But one of the other big plays that we made, and now this even goes to answer, what I've titled this video, is now a good time to invest in the stock market. This is where people have said, go after these yields. And we actually picked up shares of this. I got a January 2020 82.50 call for 5 cents because there was rumors that Walgreens was going to be taken private, a leveraged buyout. And they're already a $53 billion company. So this would be one of the largest leveraged buyouts in history. And they have a lot of debt. And people were also wondering, Rite Aid started going up. Walgreens owns a small stake in them, so keep that in mind too. But the question is, this is what even Jim Cramer said, that you want to get into the breakout as soon as possible. And although I do agree with that to a degree, I'm more so looking at price action. I really want to see, again, what were people willing to pay. And I grabbed that 182.50 call, but I also grabbed 2 shares for the long-term portfolio, just kind of how we played Fitbit on the news of these rumors that it could get bought out or go private in this case. But the reason I liked it, and this is what even Jim Cramer was talking about, it's a high dividend. So this is why it was cool buying. I only bought 2 shares. It was like $150. You guys have seen what we've done with that long-term portfolio there, but the whole idea is, at the very least, I bought it at $63 a share. It's at 62, so we're down at it. But I want to be able to hold through these rumors and news, just like you guys saw how it took Fitbit some time to develop and mature. But now the main point is it provides a good dividend. So that's what a lot of people are watching for. And now keep that in mind with some of these companies now, as the question is, do you buy now? Well, I would compare a lot of them to the prices that they're at a year ago. And if you've seen that the dividends and other intrinsic factors have gone up, and now even look at the price of the dollar, you may see stuff even like Google with where it's at. And now this is one of the plays I want for tomorrow. It's actually somewhat cheaper, even though it's at a higher price. Think about price of the dollar, time that's went on, and the amount of earnings and how they've actually grown. So if these companies start to really break out of these levels, another good example of all of these would be NVIDIA. And this is one of the ones I really want to watch and I like. You can see here in the last 2 years, it's getting back up to one of its lower levels of 2018 and what people were willing to pay for it there too. So some are going to be breaking out of these key support levels or key levels that they haven't really touched in a few months. So watch out for those, and that's going to be the question. But the question is, buying into those stocks, it either has to provide a very high yield if it's dramatically cheaper than what people are willing to pay for it, or if it is higher and it has higher growth, they have to be doing considerably better or doing materially different or performing better to even justify it at some of these plays. But now from a trading standpoint, this is going to open up a lot of opportunities there. So I'll get into some more of those, but we're going to be watching those plays. As far as everything else, the main plays for tomorrow, Qualcomm is going to be the first one. The puts went down today, and I did acquire more puts. I got November 8th. I did this on the Robinhood account. I deposited another 100 because we blew that thing up. So I think I'm even just going to throw the full entire amount. I'm going to do $50 on puts, $50 on calls. And the key is I'm going on both ways with Qualcomm. The market makers are pricing in a big move, but now it's had such a big move these last 3 days. I'm kind of expecting a pullback tomorrow. The puts got cheap today. I grabbed those. So we'll see. If not, if it does go up tomorrow and does run up into earnings, I'll sell some of the calls that I have. But I acquired 73 puts for November 8th, and then I'm going to look tomorrow on the Robinhood account to get another $50 worth of the 90 of the November 15th calls. And I'm playing both ways, and I'm still holding that $3,000 position. I got $2,000 on calls. I'm still holding the 92.50s for November 15th, and then I still have the 72.5 puts. I have 50 of those on November 8th, and those have depreciated now $500. So when we paid $900 for them, they're worth like $400 now. But the other calls are still up $2,600. They barely went down today. So watch out for that. And if it does go up substantially tomorrow, I'm going to probably look to cut half of the calls, still add to the Robinhood, and then hold 50-50 coming in there. Otherwise, I'm weighted more towards calls for earnings. And depending on the move tomorrow, that could even dictate a lot and let us know kind of really what's going to happen with the earnings. And you'll see the IV change, especially as we come into there. But that's going to be a key one to watch. Square, if you guys remember, we put this play up there yesterday on the watch list. That's why you're supposed to be following along. Make sure you guys get it. If you're going to miss it, make sure you get your stream alerts. And also understand, too, option traders shouldn't risk you can lose off almost your financial investment. Please consult the financial advisor for educational purposes only. Thank you. But we got this Square, and this did exactly what Qualcomm did just a day later. But it did level out here towards the end of the day, which was kind of unique considering the after hours move. But we got the 51 puts for November 15th and then the 76 calls. But what happened, the stock drop was down, and it closed down a 1.5%. But here it was down 3% today, and the puts went up 100%, but the calls stayed the same, or they only went down $20. So this is something you have to pay attention to. So I like that coming into this, because this is telling you about the market pricing and how people feel towards it. So I think Square has the potential to also be a big mover tomorrow, even though it historically doesn't move too much except for the last two earnings it had. So watch them. And then lastly is going to be Roku. We have a small one direction play, but I think, or both directions, but $50 here and there. You could kind of see it's kind of gave up to its earnings. It's calming down. Watch that move tomorrow, and that's going to be the key with all of these. Square, Qualcomm, Roku, any of the big earnings tomorrow, they could provide an opportunity to flip anything as long as it starts coming up. If you see real big moves individually out the gate on these in the morning, you guys have seen what stocks like Amazon did. There could be an opportunity to even flip, parlay, and get some free plays coming in all this. So watch out for those. As far, moving forward, watch Home Depot. I like this one. It finally came down, and of course the time we didn't roll over, it hit 230 at one point. How it's holding up relative to all the other growth and momentum stocks and all that, keep an eye out for that, because if you start to see things give up, this is important. And again, this has to relate to, is now a good time to buy? See what people are willing to pay for Home Depot, but now watch the divergences. Watch what's pulling the market up and coming down, because at the end of the day today, the S&P closed red, but the NASDAQ and Dow Jones closed green, as well as the VIX. So this is very interesting to watch all the way around. So I'm going to be watch HD. We said all these as the main plays. Walgreens, I'm still holding the shares, and we have the January call again. I only spent $5 on it, so I'd hold it, but I think there's going to be a lot of demand, and you got to give this time. We'll see how many days the rumor develops. The more you hear about it, and once the rumor leaks, if it is going to be real, you'll see action quickly, kind of like we saw with Fitbit. That still took a few days, but there is some headwinds with this deal and what can make it happen. But that's why I even bought it long term, because at the end of the day, I think with the small amount, we're buying it very, very cheap on the long term end. They're down like over 22% on the year, or even in the last 5 years. You could see even at 63, we're buying it at a very, very, literally almost a 5-year low here, and it's still providing that dividend yield. So we'll see what happens there, but I like that one. I'm going to keep my eye out for that, and then watch AMD and the other chip makers coming into Qualcomm. Like I said, watching the video as well, but AMD had a crazy move, and I think Jim Cramer even pumped them as well too. But this is a really big all-time high for them, and usually when it kind of goes crazy like this, it could go crazy. It gets very sketchy at times, so watch out for it. But it was almost around this same time last year that this happened, and it had a big rise up and fall. So this could set up a good opportunity as far as the traders are concerned, going both directions on this. So have fun with that one. But I'm going to definitely keep an eye on that. And then Google, this is one I want tomorrow. That's what I said to take a look out for. And this is what I wanted to show you guys. This is what I was saying. You could just wait for even trade news, because this is even applied with Google. I wanted these in the beginning of the week. We haven't really been focusing on them. And you can see on Monday, they went up from like $1 to like $4 to $6 today, and then they came down. But when you start seeing these further out of the money ones, because if Google does break out, it can make a big move. they're back to the same price as Monday. So you could just wait, push these to the wall. And when Google, if it really is going to break out here, the out of the monies that were, these were all even more, a lot more expensive earlier today, they're getting slash 50% off. So you could wait a little bit. The patience is good. So it's kind of been good. We've been focused on these other plays, but really what I'm trying to say here too is don't forget a lot of these stocks are at key points for breaking out. Amazon as well too. Amazon's a little bit under there, but Google stands out in that section. Watch Apple now too. They're holding up, and see, because Apple is now doing just extremely better than anything. And again, they have a whole different share structure, but watch out for even divergences in rotation. If Apple does start to come down, it's been leading the market a lot, so see how everything else responds with it. And then also now Boeing as well too, Dow component. But this is what I said, watch. I'm even considering an iron condor, but I said once it breaks out of this, either up or down, that could be a big move. There's a lot of 1,000% options on that. So if it continues and gets out of hand, watch till Friday and pushing it to the wall. Or if this kind of pops up and comes back or sets a new range, some of these spreads in iron condors could make sense. But take a look, in the last year, look at this price at 358. This is what I'm saying is now a good time to buy. Well, look at the price action and what people were willing to pay for Boeing over the last 12 months. What has changed? What is the same? You still had all the issues. You got some lost orders, but now you have more clarification, less worry. That's why people aren't selling it off. So it's interesting to see where it goes from here. So I like them. And then lastly, watch Disney as well too. Or not lastly, there's still a few more up here, but this is kind of moving on from these bigger market moves and some of these at key levels. But watch Disney where it's at. Their Disney Plus, we're going to get more data and release on that, as well as their earnings right around the corner. They're not pricing in too much, so they don't really meet the criteria as much. But oddly enough, I remember the last time, when Qualcomm came out, Disney happened right before too, so they kind of had their own individual news, and they're both kind of had these big fundamental news. They gapped up. They're staying there. So see how the market is valuing and what they're willing to pay there for Disney as well. Understand that price action. Then Expedia. I was talking about Booking. I kind of like Booking, and I thought that could be a good one, but then I thought about it. The spreads were expensive. If someone remind me about this tomorrow, I'm going to look into Expedia possibly for an earnings play, because that could be a cheaper way to get in on some of this travel. And the main play I'm going after this is the impact of foreign currency on travel, these companies and all that, and overall impact of what they make from foreign currency, as well as foreign currency fluctuations impacting demand. So I like that. And then lastly, I said in the video. So now moving on here, watch HubSpot. And then watch, these are some of the final plays. Uber, they're going to come down. The lockup's going to be expired tomorrow. It's kind of playing out almost exactly like Beyond. It's responding to the earnings, and it's just going to be kind of a slow move down, and that's what I want to see. And that could pick up, but same thing, push it to the wall. Some of those contracts got cheap, then got expensive, but even with Beyond, you could have been right, but it happened so slow. It's hard to hit, but for the frog hunters out there, it creates a lot of opportunity. So keep your eye on that one. Watch TLT. It dropped and came back up, and I think it's at an interesting level. This is one of the biggest sell-offs I've seen on it, even bigger than this sell-off considering how many days this took in the size. But watch what happens here, because if it does break below here, this will be a real big fundamental shift with bonds, and this will even be telling you stuff, hey, is now a time to buy in the market or not? Because if this goes through, bond yields are going to be going up. The demand for bonds isn't going to be there. If bonds are offering a high yield, that means people could probably get a higher yield elsewhere. So watch how this balances out with the market in general. But if it holds up for here, that's why we only got a small portion of our TLT plays are covering till November. So those ones are going to be higher risk, high reward. But if anything, if you are looking to average down on that, I would get December. That's what I'm holding. But we even did that poll today. A lot of people actually cashed out, and good for you guys. You guys saw the difference. This was a winning play depending on when you took it. So be smart with that, and be smart even just with the timing in general. And again, space it out, give it time. It's just like if you're going to predict or time news, just give it a second and wait a little bit and let the pricing come there and use it to your advantage. Then we got Redfin. They have earnings, and I've been debating, I think, because we had a dilemma because I already own so many of this in my main long-term portfolio. I was like, do I add this to the long-term one for the coal? And people said, act as if nothing existed. I would probably want to get Redfin. So they have earnings, and I'm just disappointed because over the last 2 days, it's already went up 3%. So I might wait till after earnings to see if we add it. If not, and it goes up from earnings, we'll just have to wait. If it goes down, that could be our entry in there on the long-term portfolio. And then lastly, CMG. We saw McDonald's, and McDonald's bounced up today. Starbucks had kind of a decent move, but it still stayed down there. I'm still pretty bearish on Starbucks. But then Chipotle too. Chipotle and all these restaurant stocks have been following this trend down after earnings. I was thinking of selling a put spread on them for them to kind of bounce and do some of that upside like McDonald's, but the credits are only at like $1.20 or $1.50. So I'm trying to see kind of how it levels out and if the premiums get a little bit better or offer a tighter spread or a better credit to collateral, and I'd be interested in that one. But that is your watch list, ladies and gentlemen. Make sure you post your watch list. Make sure you drop your thumbs up on the video. Make sure we see you in the morning. Make sure you're hydrated, healthy, ready to go. Be positive, be respectful, be grateful. Get ready for earnings. Punch yourself in the nuts so you know what's coming. And if you're not into that pain, don't take that pain. Understand what's going to happen. Be smart. Stretch the dollar. Expand your mind. Do everything you need to do. But get in the game. It's going to be a fun November, December, and we got another year, another week after that, and another year, another 2020, 2021. It's the code 2020, baby. Let's go!